First of all, a very good evening to one and all present. I am Professor Sandeep Ansali from the team GIBS Business School, Bangalore. Today, we all are virtually connected as a part of GIBS IRE Talks. The GIBS IRE Talks Forum brings together the inspirational speakers to deliver sessions related to innovation, research, and entrepreneurship. GIBS always brings impartation topics that are beneficial to students and professionals. And today's IRE topic is how to follow global financial markets. And according to GIBS, global financial markets throughout the world have become more integrated as a result of technological advancements and globalization. International trade and investments have expanded, making it simpler for enterprises to expand beyond their home countries and enter the global markets. I welcome all the participants to this IRE Talks on behalf of GIBS Business School family. Please allow me to share a few insights about GIBS before we begin. GIBS Business School Bangalore is a place where talents are nurtured, ambitions cherished, ideas shared, and dreams fulfilled. GIBS Business School is an exclusive business school based in Bangalore, and which is an exclusive business school in Bangalore. So we are an AICTE approved institution providing PGDM program and BBA from Bangalore University. To prepare its students for success, GIBS has designed the Industry 4.0 curriculum and introduced a number of unique programs for students like Innovation, Research and Entrepreneurship Program, the Finishing School, Business Mastery Program, and Sports Management Certification Program. GIBS Bangalore is delighted to announce its 100% placement for the PGDM batch student of 2022. Moreover, once again we have raised our bars by placing the entire batch of students within the month of March 2022. This achievement is also been featured by Times of India on 21st March 2022. Thank you so much for that, sir. I would love to extend my warm greetings to Mr. Kirron Bindu, the Principal Mellen Capital, the resource person for IRE Talks. So we are really grateful that you have accepted our invitation to be a part of this webinar as a keynote speaker. And it's my privilege and pleasure to moderate this session. So that's on how to follow global financial markets. And now before we begin, I would love to introduce Mr. Kirron Bindu, sir, to the distinguished audience. He has a domain expertise in finance. His area of interest is in financial derivatives, corporate valuation, risk management, and recently GST. Starting in 1995, Kirron sir has experience in accounting and audit areas too. He is a principal in Mellen Capital, which focuses on advisory in ESOPs, merger and acquisition transaction advisory. His past corporate consulting and system domain, he had delivered corporate training in finance in Oracle, HP, Northern Trust, and Symbol Technologies. Between 2013 and 16, as a mentor at leading accelerator called Kirron, he has guided the financial projections and valuation efforts of over a dozen promising tech startups. In 2002, Kirron sir has taught in every single non-IIM member institutions in Bangalore, including the Christ University Alliance Academy, IBS Bangalore, Symbiosis, NMIMS, and various top B schools in the country. Thanks for being here with us, sir. Thanks for accepting. And the last thing for this, all the participants, in case if you have any questions or doubts, probably you can post it in the Q&A section. We'll take it at the end of the session. Sir, over to you, sir.
Thank you for that wonderful introduction. Thank you for having me today. At any time, if my connection has a problem, please let me know. And I can pick it off from wherever you all got disconnected with me. So the topic for the day is tracking global financial markets. And I'm going to begin a formal presentation on that so that I don't meander here, there, everywhere, and I talk exactly on the topic. So let us wet our feet into this thing called as global financial markets. There are business channels dedicated to this. There are newspapers dedicated to this. There are radio channels dedicated to this, but still there is so much confusion among the professionals and the student community as to what is it that we should pay attention to. So let me first tell you the source, the Gangotri from which you have to drink the water. And these are the credible sources. Many of them are extremely expensive. So for the student community, where do we go? So I'm going to tell all of that. Bloomberg is one of the favorite resources for every market professional, and Bloomberg channel is free to view on YouTube 24/7. Normally, YouTube is a very expensive resource and it is only for market professionals. When I started teaching, Bloomberg was actually giving away most of their content free back in 2002, 2003. It was one more channel and non-stop 24 bar 7. From Japanese markets open to Chicago closing, you could sit there an entire day and watch. I always tell the student community, the best way to get good in finance is to start following global financial markets. That's why when your people got in touch with me and said, please recommend a topic for me, this is the topic that I chose. Get into it. Understand what drives valuation of Apple. Why is Tesla in trouble? Why does Twitter want to sell itself? And on these channels, you will get to hear the CEOs come and talk. For example, if you want to know about how hospitality industry is doing, you will have the CEO of Mercure or CEO of IBIS hotels come and talk about how the hospitality industry is doing and what are the challenges they are facing. You can't get more credible information than the CEOs of those companies coming and talking. Then one more very good source of information is investing.com. I'm going to take you through that and spend some time on investing.com. It gives you in one place all information that you need. Whereas Bloomberg is like a television channel for you to watch. Investing.com, you can surf, you can follow a particular index, a particular commodity, or any of that. Morningstar is a great place to go if you want a multi-year financial statements of most of the American companies. If you want to analyze a Google or an Apple or a Tesla, you can go to Morningstar and download the 5-year financial statements. They would have done most of the analysis. For a student, the first time he's looking at these statements itself, it is very confusing, very daunting. We need to make his life easy. And the way to make his life easy is to give him these best resources that he can go and look at. And I always tell students, do not get too scared about these resources. These are made for people like you and me, and there is absolutely no need to get scared. Yahoo Finance is a great place if you're looking for historical data. If you want to see what happened to 5 years of Nifty or 5 years Sensex, Yahoo Finance is a great place. I love this next site called as World Government Bonds. World Government Bonds is a great source for knowing what is the interest rates that are prevailing across the globe at any point in time. So if you want to know what is the sovereign rating of India or what is the sovereign rating of Sri Lanka after the recent turmoil and the mess, you can go to World Government Bonds. They not only give you the interest rates of coupon bonds, they also give you the interest rate of zero coupon bonds and very interesting instrument called as credit default swap, which is insurance that you need to buy if you want to protect yourself against the possible default of one of these governments. What is it trading at? You will get to know in World Government Bonds. Then some of the top exchanges in the world, you need to know them by name. Hopefully by the end of this talk, you will know many of these top exchanges by name. NYSE has got a very good website wherein they give you a lot of current information on various economic indicators. Okay, so NYSE is a very good place for knowing about the current state of the US stock markets, which sectors are doing well, which sectors are not doing well, and the commentary that they give you there on the website is very informative. NASDAQ is basically a tech index. So all the information technology stocks are listed in NASDAQ, and you can do a comparative analysis between how has NYSE given returns vis-a-vis how has NASDAQ given its returns. So knowing some of the following indexes, which I'm going to talk about, is a must for anyone who is a little serious about finance. Which are the indexes that you must know? You must know the Japanese index, the Hong Kong index, then of course our two Indian indexes. Then you must know the Brazilian index, Bovespa, and then you must know the UK index, the German index, and the French index. These are the many indexes you must know. When I say you must know, what do I mean by that? By the end of this talk, I will hopefully you will get to know 30 countries' financial performance. 30 country financial performance you will get to know by the end of my talk in 45 minutes. I will bring you up to speed. From now on, how to track the financial markets, I will tell you. All you need to do is to have the discipline to track it from now on. Yes, for all these days you did not have guidance maybe, or you were given guidance and you did not take it seriously. I'm sure the wonderful people at GIBS have given you more than adequate guidance as to how to do all these things, but you did not register it, you did not pay attention. Let me as an outsider tell you it is very important. What your faculties would have told you to follow, all of these things are very important. You need to follow it religiously, regularly. When I say you need to know the index, what do I mean? I mean, you need to know what are the historical returns these indexes have given broadly. Broadly, you need to know that in Europe, which is the best performing market in the last 14, 15 years, which is the worst performing market in the last 14, 15 years. That idea you must have. What is the risk involved when you invest in these markets? There is a measure of risk. You need to know the risk of these markets. Then relative performance against each other. Did the German markets do well or did the French markets do well? How did the Italian markets do in comparison to all these three? Many of these indexes are correlated with each other. I will just do one exercise in front of you wherein I'll work out simultaneously the correlation of 30 markets at the same time. At one shot, I will show you how to calculate the correlation between 30 markets at the same time. You will get to know how to do that. So here is the dashboard that I have prepared for you. This is the first glance, the first mudikhai, as we say, that this is what you need to know. Finance is very interesting. Don't make it something that is extremely tedious. We have a lot of fun in finance classes. You might be surprised. It is not like we are trying to tally something here. We are trying to know what the economy may do tomorrow, and we have the freedom to kind of imagine what might have happened. Now notice Nikkei there. Nikkei is giving you from a long period of time, it has gone down and more sideways and it has come up. If you're an investor in Nikkei, then you invested way back in 1990s. Notice it was a long journey south, below, and now you have come up and there is some hope for you at 30,000 level. So if you are in, let us say, Sensex, then notice that it is a one-way street. Sensex has done very well, except for that small blip there for 2008 subprime mortgage crisis. There is one crash there in Sensex that you see, and another crash there for the coronavirus lockdown. It has literally been a one-way street. So when you compare Nikkei and when you compare Sensex, a Japanese investor will have a regret that he stayed back in Japan only to invest in his Japanese markets, and he did not come out and invest in Sensex. Now, this is a very important intelligence to have. When you're standing in front of investors and giving them your pitch as to why they have to invest in the Indian markets, putting these two charts in front of them becomes a no-brainer. All right, that's why it is critical to know these things. Then you have the NYSE composite. Notice how the NYSE composite mirrors something that what Sensex has done, but Sensex is more steeper than NYSE composite. NYSE composite comprises of 30 top industrial conglomerates in the United States. And then you have the NASDAQ. You have the NASDAQ, notice it is very steep. It has given you excellent returns in the past. And then you have the Brazilian stock market. So like this, I just built a small dashboard for you just to take you through now I've just listed down the important links for you. I've just listed down some of the important links. You click on these links, it will take you through these websites, because I realize that internet is an ocean. If I ask you to do a Google search, where will you go? So it is impossible for you to just, if I were to blindly tell you do a Google search. So these are some of the websites, the links to which I have only put so that you get an idea as to where you have to go and what you have to do. Basically, when we talk about global financial markets, the following are the markets we are very keen to know. The following are the markets: stock markets, bond markets, currency markets, derivatives markets, and commodities. These are the 5 markets we are very interested in. I repeat it: stock market, bond market, currency markets, derivatives markets, and commodity markets. These are the 5 markets that are highly interlinked. One impacts the other. a crisis in one can get transformed to another very quickly, engulfing the entire world in a financial crisis. So these are some of the links that I have listed there. You can go wet your feet in finance there, and these are all very good places. So when I say global stock market, what do I mean? Look at on the left side, I've given you the data. I've given you a whole lot of indexes starting from your Dow Jones, and the flag there tells you which country it is from. So this is so large, the list, that India does not show up here. Doesn't matter. You have the DAX, the FTSE 100, and the CAC. Notice the flag next to that, Eurostoxx 50. Eurostoxx 50 is the European index. The last price, the high and the low, and the change for one day in absolute terms and in percentage terms.
Sir, you're on mute, sir.
Here, and when you go to investing.com, you will get the screen. You can follow this. And when I click on Nifty, what do I get is on the right side, the component. What is Nifty comprises of? Now you will see all the Indian stocks there. You will see
Kiran sir, you're not audible, sir.
And the change in absolute terms.
Kiran sir?
52 rupees 90 paisa on a negative side. Axis Bank changed by 4 rupees 25.
Kiran sir, you're not audible, sir.
Change in the volumes traded. Large companies, which are very respected companies, have got very huge volumes. Notice Nestle India, hardly any volumes, 0.54.
Kiran sir, am I audible? Kiran sir, am I audible?
Sandeep sir, can you drop a...
I'll try to connect Kiran sir once again over the phone. Just allow us, please.
Yes, sir.
Kiran sir, am I audible to you?
Hi, am I audible?
Yes, sir. Now you're audible, sir. Actually, sorry.
Yeah. I'm just coming back. There was some issue from my end. I'm just coming back. Yeah, sorry for that.
No.
So on the right side, you will see all the Indian stocks that you are very familiar with. What screen I was sharing. So these are the stocks that you are very familiar with. When you click there, it will take you through the chart. For example, Hindustan Unilever, you can go through the chart. Charts, basically, all of them look the same. There is going to be a line chart. All of them looks like mountains. Now, you're losing money every day. So there are basically two kind of a shape that you will see most of the charts in: higher high and higher lows, and lower highs and lower lows. Now, lower high and lower lows is a bearish market wherein people are not having the confidence that the stock is going to do well. The stocks are losing the ground. And in between these two is the sideward movements. Sideward movements wherein some of the days there's an upswing, some of the days there's a downswing. In a typical course that you will have technical analysis wherein your faculties would have spoken to you, or they will speak to you more about that. So don't miss those classes wherein the faculties talk to you about technical analysis and stuff like that. It is going to be very important for you to understand. Any market, you take Brent crude, You take commodities, easy to understand because you would have seen commodities. You take gold. For track gold market for 15 days or track orange fruit juice concentrate market for 15 days. All of this trade on Chicago Board of Trade. When you follow that for 15, 20 days, when you read the reports on what is happening to the demand side, what is happening to the supply side, did Saudi Arabia increase the price of oil? Is the Russian oil industry going to be producing more? When you see that, then automatically what happens is you get an interest to read about these things. It kind of whets your appetite to read more and more on these things. And then you open your textbooks for.
Kiran sir, your screen is not visible.
Okay. So where was I? I was talking to you about, yeah. So let me just share with you the next slide here. Yeah, I'll just keep it like that, maybe. Yeah, so these two charts are the next things that you need to know. Any stock in the world will have a chart like this. This is Asian Paints. Now, this is a 1 month chart going all the way back to 2018. And notice it is like the peak. It has gone up and up and up, and now it is in the danger zone. It has come down a little. Now, the dilemma for the investor. Will it stop falling? Will it stop falling further? Will it fall further? Or will it go up? Okay, this is the dilemma that an investor always meets. It's very nice that I'm conducting the webinar at this point in time because the stock has dropped considerably. And now it is in a dilemma situation. Do you invest 2,833 and buy one share, and 2 days later it goes to 2,600 and you are regretting, oh, I should have waited for 2 more days, I would have got it cheaper. Or 2 days later it could be at 3,000 and you are saying, oh, 2 days back it was so less. 2 days back, if only I had bought it, it would have been so nice. You would be saying like that. So look at the data that is given at the below there. Previous close. What was yesterday's close? Yesterday's close 87. That means Asian Paints has dropped from yesterday to today. Then open interest. The next one, yeah, I saw that I saw that my connection is going and coming and going and coming. So let me talk a little bit about understanding the company that you are trying to study. So if you don't know what Asian Paints is, then there is really no point in looking at their charts. So your study on a particular chart or a particular investment opportunity should commence from understanding a particular business. That is where your marketing, your human resources, all of those things comes into play. What are the marketing strategies they're using? They're using Deepika Padukone. Will Deepika Padukone really bother about what kind of walls she has? Probably she doesn't even have the time to look at what kind of paints are there on her walls, but they use her. Why? Because she's aspirational. Okay, so everybody wants a house that is so aspirational that somebody like Deepika Padukone will appreciate the house. So that's what they're trying to say, and they can afford Deepika Padukone. That's what they're trying to communicate. That look, our brand ambassador is so and so, and Babalgari and all of these rich brands use her. We are also using her. So they want to bracket themselves in that range. Like this, you need to know about the company. That's why if you're in finance, you can't say that I'm only going to study numbers. I don't know anything about marketing. You can't say that. You can't say that I'm in finance. I don't need to know anything about HR. You need to know everything about something. That is the biggest thing that a PGDM does. PGDM gives you the tools to understand all aspects of a company's department. You should not prepare yourself like a super specialist, because that is not the purpose of a PGDM program. A PGDM program should be such that by talking to you, nobody should be able to make out whether you specialize in finance or HR or marketing or systems. That should be your level of general intelligence and awareness on all the topics. Then you will flourish very well. That is the kind of people that a company wants, that they can throw you in a situation and you know how to assemble resources. Now, on the right side, there is a very critical thing that most managers need to be very aware of. As children, we would be told every day morning, please get up and look at God's photo. Continue that. That is a very good practice. But in addition to God's photo, if you want to be a very good manager, please look at what the interest rate is doing every single day. Maybe not immediately after you get up, but at least once a day you need to look at what is interest rates doing every day. Right now, the 10-year interest rate is at 7.5%. This number should be locked in your head. The first time you were introduced to the 10-year bond yield of Indian government bond, it was 7.5%. Notice when interest rates climb up, nobody will buy a house. Nobody will buy a car. Everybody will postpone consumption. Now imagine you're working as an employee of Tata Motors. Why should they produce a car when nobody buys? We need low interest rates for the economy to be flourishing. The only people who don't need low interest rates are the pensioners, who will be a vociferous people sitting on TV there demanding very high interest rates. Your houses won't sell. House is the single biggest economic engine that we have. America was built on housing mortgages. 270 sectors the housing sector connects to. 270 sectors depend on their livelihood on housing. Your tiles, your cement, your steel, your construction jobs, everything is dependent on housing. Your furnitures, your electrical equipments, escalators, everything. We need low interest rates. And now look at what is happening with interest rate. The moment you see interest rate climb, you need to tell yourself that the economy is going to slow down. This is the single biggest takeaway of this webinar. The understanding where interest rates are is critical for managers to plan their next 3 months, next quarter. It is so important. That's why I'm spending so much time on this. Next, you have the commodity markets. Commodity markets, Brent crude, crude oil, North Sea crude, West Texas crude, all of these are crude oil. Energy is the single important thing that is traded on commodity markets. Then you have the grain, you have the precious metals. All of these commodity markets gives you a very good idea as to how the economy is going to be doing 6 months from now. If you want to know what is going to happen to the economy 6 months from now, watch copper prices. Copper is an industrial metal. The moment the copper prices begins to go high up, it means to say that the industrial consumption of copper is going up. Why do they need the copper? They need the copper to put it in various products. And industry will not produce something if they don't have the orders for it. So the moment the copper prices start to go up, tell yourself, yes, we are back in business. The copper prices are going up, so the economy is going to do well. On the right side are all the commodities that are there. Notice in 1 month what has happened. Last high, low, close, and change of gold. Gold is a precious metal. And then you have various other metals. Look at copper. Copper is going up, change 61.5. And what was the last recorded price? 9509, 9557. So you need to press on that particular link, go look at copper and see whether it has continuously gone up like Sensex, or it has tanked like Nikkei and then it is coming up. So you will get a sense of feeling. Just like when you meet people, you can guess what kind of a person that person is. After you spend sufficient time on this, these numbers will start to talk to you. And that is the beauty of it. That won't happen unless you follow the markets regularly. It won't happen. These numbers will not mean anything to you. Today you have seen what is the price of oil and natural gas. So you have a reference. Tomorrow when you see, with today's reference, you can say, bada hai ya ghata hai. If you did not have today's reference, how are you going to make sense of whether it has gone up or come down? You have no reference point, okay? So now I will come to what I promised to you. The 15 years performance of almost 16 to 17 some of the top economies of the world. This is given by Morgan Stanley. Morgan Stanley Index prepares this, and this gives you year-wise. PRT is Portugal. ESP is Spain. IRL is Ireland. So this gives you the data. This is prepared by Morgan Stanley. All right. This is prepared by Morgan Stanley. Now, what do we make out of it? Let us see. What do we make out of it? I'm just going to open the analysis that I've shared with the college officials, and I have no problem if you share it with the students. It is all the better because they will have a reference to do the analysis themselves. I'm in the business of spreading knowledge, not curtailing knowledge. So I have absolutely no problem with that. More the people know it, the better analysts we will have. There you go. So I've shared my Excel sheet. It should be coming up on your screen just now. Yeah, let me slowly explain this to you. Don't get worried that, oh my God, there are a lot of numbers here. Last time, sir, I would request from the college officials to please share this file. If in case I'm not able to successfully share the file from my end, please share it and zoom it in so that, yeah, it came on.
That's
it came on. Perfect, perfect. So the difference between this information and my information is that it is sorted country-wise. This information that has been given to you is sorted ascending order to descending order wise, telling you which country came first in which year. That is why Portugal came first in 2006, Finland came first in 2007, Israel came first in 2008, then Norway came first in 2009. This is given who came first, who came second. I have modified the arrangement to tell you country-wise. That is the first thing that I have done. It took me almost an hour to put this data and I did it for you. So this is the kind of effort that goes in for me to come to a single class to meet my students. So you can imagine when I give you an assignment, what is the kind of effort that I'm expecting from my students when I typically do it, because it is very serious. These are very serious things. Because the teaching philosophy is that we are preparing warriors, financial and economic warriors whom the company can depend upon. Jobs are dependent on CFOs. The difference between people eating the day night or people having a pink slip is the quality of the CFO. He should be so good at managing the numbers and telling people how much to hire, how much not to hire, that people should not have to face pink slips. All right. So this is the data sorted country-wise. I'm just only going to focus your attention on this B. Forget everything else. Only the first column, Portugal. What is the total returns we got? Just let us add up the number. Total returns, 72%. That means if I had invested 10 lakh rupees, I would have gotten 7,27,000. If I had invested 10 lakh rupees. Simple, easy to understand. Now, if I had invested in Sweden, same 10 lakh rupees, I would have gotten much more. I would have gotten 179%, almost 27 lakhs 90,000 I would have gotten. So this total itself tells you which is best, which is worst. So because I don't want to strain my eyes, what I do, I will just block this and I will use what is called as conditional formatting, wherein green tells me that it is very good, red tells me that it is hopeless. Notice here, red tells me it is hopeless. Notice Denmark, a wonderful 238%. Denmark. So this itself tells you who has done well, who has done badly. Data is there in front of you. When you have data in front of you, people cannot argue. This is not an opinion that you are giving. This is facts. Always in finance, back your facts. Let the facts decide. You don't decide. The worst mistake professionals do is to cherry pick data and arrive at wrong conclusions. You will kill companies if you do this. I repeat, don't cherry pick data and arrive at wrong conclusions. Let the data be there. You should not have a bias that somehow I have to make these investors invest in Sweden. Array, the numbers are not telling them. Sweden is only 179. Next to that is Denmark. It is doing much better. So the numbers have to decide your policies as far as possible. As far as possible. I'm not saying only numbers should decide your policy. As far as possible. Yes, there may be a story also that okay, this economy has reached a point where, like our country, if you see historically, we might look very bad, but still people are coming in. Why? Because there's a story to it. There's a growing middle class. There is a purchasing power. So in our country, there is a growing middle class, there is a growing purchasing power, and that's why people are coming and investing. Now, average, what is the average? If I just simply did an average, Portugal 4.85. This average tells me to form an expectation. On an average, if in any year I invested in Portugal, I can expect about 4.85% returns. So here also, Denmark at 15.91 is a clear winner. Denmark is a clear winner. Okay. Then what was the maximum in any year? What was the minimum in any year? This is a very good indicator of how much pain you will suffer, how much gain you will enjoy. It is like looking at a batsman's maximum and minimum. Rahul Dravid's maximum and minimum could be in the range of 90 and 60. Which means to say, if Rahul Dravid takes the bat and goes out to bat, at least he will get a 60. Maximum and minimum. But Virendra Sehwag is 300 and 0. So if Virendra Sehwag goes out to bat, he may get a 300, he may get a 0. So if this is wider, it is more risky. If this maximum and minimum is very wide, it is very risky. Always look at the range. What is the best case best? What is the worst case worst in the last 10 years? That will give you the range. So you must be prepared for at least that much capital loss. You must be prepared for that much capital loss mentally if you're going to enter that market. If you're not willing, then don't enter that market. Then median. All your statistics professors will have told you what is a median, but we would have forgotten. Median is nothing but you take all the numbers, arrange it in ascending order. Arrange it in ascending order, take the middle one. If the middle one, if there is odd number, then middle one is very easy to spot. But if you have even, then middle two numbers, take that and take an average. It is exactly the midpoint of whatever you have. So notice the median and the average will differ considerably. For Sweden, median is 21.8, average is 11.98. Median is a good estimate of the historical performance. Average is a good indicator of what you are likely to earn in the future. I repeat, median is a good way of looking at historical performance. Average is a good way of knowing what the market is likely to return in the future. Then we have two very technical things called as beta and alpha. Higher the beta, higher the systemic risk. So here we have one country, which is not actually a country. This is an index. What you see here, this is an index. This is the market index. This is the market index. This is not a country. EAFE is not a country. This is an index. All others are countries. So against this index, how did my market perform? This is called the slope of the characteristic line. It will become too technical if I were to explain that to you, but in a typical finance class, that would be explained to you. But just now you understand that 1 means average. Above 1 means above average risk. Below 1 means below average risk. That's all. That much you know. I repeat. 1 means average risk. Above 1, above average risk. So what I was telling you, beta comes in 3 flavors: apple, vanilla, strawberry. No, beta 1 means average risk. Above 1 means above average risk. Below 1 means below average risk. Alpha is the holy grail of finance. It is the holy grail of finance. We want alpha to be positive. We will not invest in those countries which have given negative alpha. Ruled out. We are not even going to go for applying for visa. If you see any negative alpha there, run for the exit. There are many countries there that are showing you negative alpha. We need alpha to be positive. Look at Denmark's alpha, 7.52. Phenomenal. Alpha is a measure of risk-adjusted performance. Oh my God, what the hell is risk-adjusted performance? I'll make my life very simple for you. We are looking at 3 motorcycles. What is the first question we'll ask him? What is the mileage? What is he going to tell you? 50 kilometers per liter. It is understood. Second one, 60 kilometers per liter. Wow, very nice. Third one, 30 kilometers per liter. So obviously, if you are looking at economy, you will go for the second bike. Alpha tells you the return that you are going to earn per unit of risk taken. Higher the better. That much you know now. More than enough. Okay. Then we have the measure of the total risk called as the standard deviation. Okay. So how much time do I have? I'm already closing in on 5:45. So I'll quickly finish this.
Yes, sir.
I'll quickly finish this. So all of these are the alpha, the beta, the standard deviation, and all of that are technical finance that you will know if you did a finance specialization. If you didn't know, if you started to work in finance, they will teach you in 5 days' time. Don't worry about that. It's not that difficult. Now, what have I done? I've taken 100 rupees and I've put it in Portugal and I've rolled it forward using the rate of return. I've just done a simple mathematics, 100 into 1 plus rate of return. Then the next one is 148 into 1 plus the second rate of return. Like that, I have rolled it forward. So for staying invested for 14 years in Portugal, my 100 euros would have become 112 euros. Pathetic. Look at Netherlands. Till now, your attention would have not gone to Netherlands. 100 has become 341 euros. Look at Denmark. 100 has become 564 euros. There are so many countries. You want to see a country that is struggling? A country that is struggling? Look at Japan. 100 has become 171. Can you imagine what is going to be happening, the turmoil that is going to be taking place in the pension funds of these countries, wherein they are investing and they are not getting the returns and they have to pay the pension of the retirees? That is why it becomes so important for people in India to reach out to these countries and win investing mandates. That is why you people are earning your MBA degree, to go win investing mandates. These are the kind of data that when you put in front of them, the data talks. Listen, we know what you have earned in the last 15 years. Now, if I show you in Sensex and Nifty, it will blow your mind away. It is somewhere in the region of like 1,200. So it is more than, you're talking about risk all the time in India. It is much more than that. You are getting rewarded much more than that. So the numbers will then talk. So here is investing 100. What would have happened to it? So this is the raw data and this is the analysis. So this is typically what you learn in a typical high quality finance program that a typical B school like a GIBS would put out. And that makes you at the end of 1 year solid to be capable of competing with most of the other professionals in a way that they simply blow their mind away. Any questions, I'll be happy to answer it, provided I know the answer. It's quite possible that I would lay golden egg.
We have a few questions already there, sir. So can we take up the question, sir?
Yeah. So Jiva says, which stocks are good to buy now? Which stocks are good to buy now? Well, I will not escape answering those. I have certain favorite stocks of mine, but I would urge you to do your own research. I love Asian Paints. I love Eicher Motors. I love Tata Consultancy Services. More than Tata Consultancy Services, I love Mindtree because I keep doing this analysis day in and day out. And in the power space, keep away from power space. Although Adani Transmission and Transformers looks superb, I don't want you to go near it because they don't have a turnover, they don't have assets in place. It's very risky. Then I like Hindustan Unilever Limited, ITC. If you want to buy, you want it for only dividends only. Okay, I think that is good. What is really the best approach for trading Bank Nifty intraday? I am not per se into trading. I would ask you to develop certain screens before you sit down for trading. The screens ought to be things like parabolic SAR and also the charts, what the charts are telling you, higher high, higher lows. Don't trade around those times wherein there are certain critical information that is coming out into the markets, because you may be having an ugly surprise. But I would broadly request all of you not to trade intraday, because there only the brokers make money. They themselves openly say. So having been in this for so long, I can tell you that what they say, intraday mein paisa nahi banta hai, client barbaad hota. This is the market talk. So I'm telling you what their sense is. Even after that, if you want to do, please be very careful. Work with small lots, maybe one lot, avoid shorting, and always hedge your position, put a stop loss. Anupriya, I've given you more than adequate resources. Bloomberg, if the most lazy person can go to YouTube and watch Bloomberg every single day. They will analyze and put the food in front of you. You just have to consume it. You don't need to do any number crunching like me. How are these values arrived at? Like, what are the factors that affect the global country stock? Consumption story is what affects. Inflation affects. Interest rates affects. These are the three things that affects the stock prices. Inflation goes up 1%, stock market drops 4%. So you watch inflation. How about increasing in GDP but decrease in financial transactions? Stock markets tell you what is likely to happen in the next 6 months. Stock markets are a leading indicator of what is likely to happen in the next 6 months. What is happening with our stock markets right now is they are in a technical, the moving average is right above your price line. So every time the price line moves towards the moving average, it falls. It's a technical issue that is pushing our market down. It has obviously run up so much, it will fall a little bit. Before it has to cut the moving average line from below. Watch it cut the moving average line from below. That is the only thing that is happening right now. Technically, the moving average line is above the price line. And when that happens, it is a continued bear market till the price line cuts the moving average line from below. Watch for that. Dr. SP Sunita, that is the reason. It is a technical issue that is happening there. The shorts are piling on because that is the trend. When the price line cuts the moving average line from above, bear market. Time to run for the exit. Everybody bolts. They close out their position and they run because it is going to fall. No matter what GST, it is technical. And then once the price has fallen sufficiently, they get the confidence to buy it back, and they buy it, and the price line cuts the moving average line from below. Pile on it. It is going to go up. Then, general guideline for newcomer to follow when deciding to buy stocks. Rajiv Balakrishnan, two things for you. General guideline, look at the quality of the management. Good quality management, bad quality management. How do you know the quality of the management? The press talks about it. Second one, look at the assets turnover ratio. Assets turnover ratio. Nobody has succeeded in selling more at cheap prices and making wealth. Nobody. Not even Big Bazaar. Nobody succeeds in selling cheap and best and I'm going to make enormous wealth. It does not happen. Why is Eicher Motors a great stock? Because they sell Royal Enfield bikes that are not cheap. You don't go out and buy a Royal Enfield bike because it is cheap. You go out and buy because they're styled well, their quality is good, and you really want to drive it. Titan watches. Why is it a great wealth builder? Not because they sell Titan watches that are cheap. Yes, relatively to Rolex, they're cheap. But still, Titan watches are expensive. Any company that does not have pricing power, that does not have branding power, will not create wealth for you. Hindustan Unilever Limited, the moment Indians wake up, they need their products of Hindustan Unilever Limited. Britannia, same thing. These are all long-term wealth builders. Watch for that. What do you have is the first question you must ask. What do you have? If you are Infosys Technologies, do you have great contracts? Are you winning contracts based on your ability to do high-value work, or are you winning contracts because you're cheap and best? That shows up in the net income margin of most of these companies. For a fresher, if you know that much, more than enough, keep watching the markets, keep listening to people, and then you will get better and better. Okay, kindly share your opinion about integration of banks and cryptocurrencies in a demonetized world. Dr. Arvind wrote, cryptocurrency is an asset class wherein the best currency has got a standard deviation of 72%, wherein I have shown you the indexes where the standard deviation is 3%, 4%. I am telling you to buy a nice car to go from point A to point B, not to rely on the Deepavali rocket to take you from point A to point B. There is a fundamental difference. Cryptocurrency are not yet still institutional quality assets. The day they become institutional quality assets, then you will see pension funds buying it. You will see insurance companies buying it. You will see large private equity firms buying it. Till then, we don't need to invest our hard-earned money because we are not investing billions of dollars and we don't have the ability to move the market. We can look elsewhere. When you have such a exceedingly value shifting asset like crypto, how do you expect the banks to settle transactions in that? Banks need something more stable because at the end of the day, the banks are just honoring your commitment. If you say, pay my bill to BWSSB on the 9th, I'm your banker, I will pay it. If you are going to deposit Bitcoin, which you purchased at 59 lakhs, and today the value of the Bitcoin is 29 lakhs, and you tell me, honor my commitment in Bitcoin, I will tell you, sir, that much of Bitcoin is not there for me to pay your electricity bill. So I will have to bounce your check. So the governors of banks already have enough problems to worry about. They already have foreign currency fluctuation to worry about. They have entered into derivative contracts. Some of it they are losing money on, some of it they are gaining money on. And then there is RBI. Then there is your statutory liquidity ratio that they're changing every 6 months once based on what the economy is doing. Then there is a huge problem of non-performing assets. There is enough and more problem for the banking sector without them having to integrate this. And the merger of big banks, the cultural shift is very, very drastic. That is still has to pan out. So I do not think that now would be the right time, or when would be the right time for this to happen. But let me play the devil's advocate of how they can make it happen. I should also tell you that what they can do is they can have a subsidiary which is a standalone entity without any legal pullback to the parent company. That subsidiary company will settle transactions in crypto, and if that subsidiary goes bankrupt, so be it. Don't come and ask us. That is not going to be guaranteed by Government of India. Yes, you want innovation? We will innovate. There is a standalone entity that we are creating, and that is going to honor all the crypto fans who want to transact in money. And that specialized entity will function as the purpose of settling the transaction. That is the only way I see it out at the moment, because it's like this. To give you a very, very pedestrian example, in most of the traditional houses, they do not cook non-veg. And then because of the pressure of the younger generation, even if they cooked non-veg, they would have a separate kitchen for cooking non-veg. They will not mix the two together. So that is the same anomaly that I can look at insofar as crypto transactions are concerned and rest of the broad economy is concerned. If they want to do it, that is the only way I see them doing it. So I've given you both sides of the argument myself.
Great, sir.
I think I have, holy cow. Sunita Sarkar, I would not be the right person to answer that question. My PGDM application rejected by GIBS. Can I reapply? Sir, please take care of.
Sir, that will take
Please.
So I think we are done with the questions for today, sir. It was indeed very, very informative session, sir. I must say that, but because the way you have used, the way in the simpler terms, the way you have made us understand, it was really very, very good. And thank you so much for that, sir. I'm sure all our participants would have taken the benefit of that, and I would say even one small percent, it adds to their life. It's really a big thing. I think we are done with our part of the job which we were supposed to. So indeed, thank you so much once again, sir. And I would like to thank, on behalf of the entire GIBS family, I would like to thank Kirron sir once again for taking out time and being here amongst us and sharing his thoughtful information with all the audience. And I would also love to thank all the participants for being there, as usual, overwhelming every time they have been here. And to all our associates, faculties, beloved students and education fraternity for attending this the webinar and having a resounding success. So we at GIBS believe in seeing is believing. So I invite all the participants. Kirron sir, anyways, you have come many a times to GIBS. You are familiar with the campus. So I must say we have a really beautiful campus. We invite you all to come down to campus, and we are really happy that Kirron sir is with us as a faculty as well. So we have been privileged and honored that we have such a wonderful faculty with us. So thank you so much for us. And a small information to the participants, the next webinar is on new blockchain. That's on 17th of June. That's 10 days from today at the same 5 p.m. and you can register yourself. We'll be having the registration links open, and you can watch this video live. You can watch this video on the YouTube also. Probably within a couple of days this video will be live on YouTube as well, and you can also watch us all our previous webinars on the YouTube channel of GIBS, and you can follow us on all the social media platforms so that you stay updated with GIBS as well. And for all the participants who have been waiting for the certificates, kindly note within 2 working days you will be receiving these certificates on your email ID. And I would like to thank once again Kirron sir. Thank you so much for joining us. It was really an honor for us to have you amongst us. Thank you so much, sir. Thank you all the participants. Have a great time ahead, and please do take care of yourself.